Welcome back. And in the ongoing conversation about risk in the crypto markets, we're now hearing that Arthur Hayes is claiming that Tether is at major risk. Now, as we have been talking about on this channel for years and we've covered quite extensively, Tether has been under extreme scrutiny for years, sued by multiple states, countries, banks, individuals, etc., saying that they are not solvent. Well, now Arthur Hayes is raising another red flag, but there's a lot of controversy here. But I think it's important, especially as we are in what I view as rotating into a bear market at the end of 2025 into 2026, specifically in crypto, how this topic continues to come up over and over and over. And whether you agree or disagree that Tether is or is not a major risk, I think it's important as a crypto investor and as a maybe crypto related investor, maybe you hold MicroStrategy, Bitcoin mining companies, etc. It's important to understand what this risk means for the overall market. So in today's video, we're going to be exploring what Arthur Hayes has said, what Tether's executives have said, and what one analyst over at Citibank has said about the warning that the largest private gold holder could be actually insolvent. Don't forget to give this video a free thumbs up and also hit the subscribe button. This is the Cryptoviser podcast. Sometimes we do individual deep dives into specific topics like we're doing today. And most of the time on this channel, we talk about the macro environment in the crypto and the stock market space, and most importantly, how to make money in these markets. Let's get right into today's video. Is Tether insolvent? Now, before we get into my opinion about whether Tether is or is not insolvent, let's understand what the controversy is all about. BitMEX co-founder Arthur Hayes sparked fresh round of scrutiny over Tether in a post, which we're going to read in full in a second. Hayes said that the stablecoin issuer is in the early innings of running a massive interest rate trade. Hayes claimed that Tether's recent attestation, or their own version of an audit, shows a balance sheet increasingly exposed to gold and Bitcoin, which he said may struggle if interest rates fall. According to Hayes, a decline of roughly 30% in those gold and Bitcoin positions would wipe out their equity, and then Tether would be, in theory, insolvent. Now, guys, there is something to this because companies like Tether and Circle, which issues USDC, they make their money on interest, right? On the interest on the cash that they're holding through treasuries, deposits, and all of that other stuff. But the issue here, especially for Circle, which is a publicly traded company on the stock market, is that if the Federal Reserve lowers interest rates, which everybody is cheering on them doing, and potentially go into negative interest rates, where you're paying the bank to hold your money, right? Instead of spending, that could be really, really negative for these stablecoin issuers, because stablecoin is supposed to be backed by dollar-denominated assets, and gold and Bitcoin are not dollar-denominated. I mean, they're dollar-denominated, but they're not dollar-backed assets. That's a big difference. So Arthur Hayes posted this on X, which shows the Tether asset breakdown. It says, as of the reporting date, the breakdown of reserves backing the fiat-denominated Tether tokens in circulation is as follows. Treasury bills, $112 billion. Overnight reverse repo agreements, $18 billion. Term reverse repo agreements, $3 billion. Money market funds, $6.4 billion. Cash and bank deposits, $30 million. Non-US Treasury bills, $47 million. And then it goes into some others, which are corporate bonds, $14.5 million. Precious metals, almost $13 billion. Bitcoin, almost $10 billion. Other investments, about $4 billion. And secured loans, $14.6 billion. And this brings all their totals to $181 billion. Now, this is great. Now, first of all, I want you guys to focus on this for a second. The overnight repo agreements, these are with the Federal Reserve, and it's basically overnight lending markets for the banking ecosystem. The fact that Tether is involved here, it basically shows that Tether is basically a bank, whether they consider themselves a bank, whether they call themselves a bank, whether they're regulated as a bank, they're basically a bank. But Arthur Hayes said the Tether folks are in the early innings of a massive interest rate trade. Arthur Hayes says the running of the massive interest rate trade. He said, how I read this audit is that they think the Federal Reserve will cut rates, which crushes their interest income. And by the way, same thing goes for Circle. In response, they're buying gold and Bitcoin that should, in theory, moon as the price of money falls. And this is true over the longer term, right? Because here's the deal. If Tether hold on to the cash and dollar assets and the interest rates lower, their return on that lowers as well. And so they're trying to get out of low paying, which, by the way, the dollar is already 4% interest rates is very low, right? Compared to the price appreciation that Bitcoin has shown over the years, right? It's significantly larger, even by, let's say the interest rates are 4 or 5% and Bitcoin's CAGR or compounding annual growth rate is about 15%. That's 3 times the amount. And we know that during times where they're printing money and making money cheaper to borrow, like during the pandemic, we saw the price of assets, hard assets like gold, Bitcoin, soaring. And for many different reasons, we're not going to get into all those in this video. But Arthur Hayes continues, saying a roughly 30% decline in the gold price and the Bitcoin position would wipe out their equity, and then Tether would, in theory, be insolvent. He said, I'm sure some large holders and exchanges will demand a real-time view of their BS. I don't know what BS is. Bank settlement? I don't know what that means. I don't think it's BS like bullshit. But anyway, so they can assess the solvency risk of Tether. Get out your popcorn. I expect the mainstream media to run wild with this, especially all the editors with TDS who want to on Lutnick and Cantor for backing the stable coin. Now, you guys have to remember, Cantor Fitzgerald is the company that has been backing Tether for many years, even before being part of this administration. So they have been big, proponents of Tether. Now, here's the deal. Personally, I don't think that Tether doesn't have the money they say they have. There is something to question about their auditing, but some of that may be that they just don't want to open their books to these third-party auditors for many different reasons. It's the same thing like we're seeing with MicroStrategy, where they're refusing to release proof of reserves. I mean, that should be way easier than Tether not getting an audit, right? All Michael Saylor has to do is tell his custodians to move the Bitcoin to individual wallets, maybe mix it into the Coinbase, all their Coinbase assets, and then put it into a wallet so that it kind of breaks down, because Michael Saylor has said he doesn't want the flows of the Bitcoin, underlying their main balance to be viewed by the general public for whatever reason. And so that's an issue, right? But people don't question it the way that they question Tether. And I remind you that Tether has been sued by many different places, like New York has sued Tether. And then they ended up settling without basically proving that Tether was insolvent or Tether didn't have the money that they say they had, which made me believe that Tether did actually have the money that they say they have. So I don't necessarily think that they're insolvent, but there is something to talk about when you're listening to what Arthur Hayes is saying here, that because interest rates going down and Tether is putting more of their money into gold and Bitcoin, which are potentially debt drop, meaning Bitcoin and gold will go higher in price. What if that doesn't happen? What if gold and Bitcoin also go down, even over the short-term period? That could wipe out any excesses that Tether does have and put Tether at risk of potential insolvency. Think about that for a second. Now, again, Tether is the largest stablecoin provider in the world. I would imagine they have probably some of the top bankers, the top top lawyers to help, guide them through this and make sure that this doesn't occur. But it's something that we have to think about, because if these stablecoin issuers have solvency issues, this could have, massive contagion risk to the other cryptos and to the belief that crypto is secure and won't lose value. Now, Paolo Adorno, who's been with Tether for, I think, since the beginning, he's the CEO of Tether. He said regarding the Tether FUD, from our latest attestation from Q3 of 2025, it says Tether will continue to maintain a multi-billion-dollar excess reserve buffer, meaning more than they are issuing in dollars. Let's say they have $1 trillion in stablecoin, they're going to have more than $1 trillion in reserves, and an overall proprietary group equity approaching $30 billion. Tether had, at the end of Q3 2025, around $7 billion in excess equity on top of the $184.5 billion in stablecoin reserves, and another $23 billion in retained earnings as part of the Tether Group equity. Tether Group total assets are at about $215 billion, but the stablecoin liabilities are only at about $184 billion. This is a $30 billion difference, right? From what their liabilities are versus what their assets are at. The S&P made the same mistake of not considering the additional group equity nor the $500 million in monthly base profits generated by US Treasury yields alone. Some influencers are bad at math or have the incentive to push our competitors. I guess he's talking about Circle there. Forever trusting who we are. No, nothing else matters. And the thing is, for Tether's entire existence as a stablecoin issuer, they have never gone insolvent. That doesn't mean they can't, but they haven't. They have never had any solvency issues. They've never had any inability to pay customers back. They've never had any proven, like cooking the books type of deal in anywhere in the world. And so I do think that some of this that Arthur Hayes is talking about, number one, Arthur Hayes likes to stir up the pot a little bit, but beyond that, he is a very smart individual and he understands risk management. But that doesn't mean that what he's saying is incorrect, but it also doesn't mean that what he's saying is correct. I don't necessarily think that Arthur Hayes is saying here that Tether is insolvent, because that's not what I'm reading. I mean, it says specifically here that a roughly 30% decline in gold and Bitcoin would wipe out their equity, and then Tether would, in theory, be insolvent. And based on the math, that would be correct, because they are going heavier into Bitcoin, $10 billion, precious metals, $13 billion, so that's about $23 billion. $23 billion is basically the buffer here, right, of $30 billion between their liability and assets. And then if you take into account a reduction in their interest rates, that's their whole buffer. And so on paper, it could be technically insolvent, right, where their assets are less than their liabilities, according to what Arthur Hayes is saying here. Now, again, I don't think this is going to occur, and I think that they would make the changes in the like short term to adjust and protect the liabilities there. But we don't know what's going to happen in a bear market, right? There's a lot of unforeseen events, and that's where I don't think Tether is the unforeseen event. I don't think Tether is the black swan. It never has been. It doesn't mean it never will be. I just don't think that right now it is going to be that thing, right? FTX, nobody thought FTX was the risk. Personally, I think MicroStrategy is a bigger risk for crypto in general than Tether is. And that's just because Tether doesn't really have that much risk. MicroStrategy, their whole business operation is just risk. Taking out debt to buy Bitcoin, then selling more of their shares and diluting their shareholders to pay dividends and buy more Bitcoin, and keep doing that over and over in perpetuity. That is a huge risk, especially in a downtrending or bear market when the price of assets will fall more than the interest rate. And so there's a lot to take in here, because this is a question that you probably should be asking if you're in the crypto space or have exposure in your portfolio to the crypto space. But that brings us to this user who's a former Citigroup research crypto lead. And he said, I spent hundreds of hours writing research on Tether for Citigroup, Citibank. Arthur Hayes missed a few key points. Let's go through these. Now, it is important to understand the banks they have been involved in crypto and researching crypto for years, right? This guy he used to do research for on Tether for Citibank. We know JP Morgan does this. JP Morgan created their own blockchain. They have their own crypto coin. So the banks are involved and have been involved, whether they say it or not. We know that they have been. So he says, this former researcher at Citigroup says their disclosed assets equal all of their corporate or does not equal all their corporate assets. He said when Tether generates money, they have a separate equity balance sheet, which they don't report publicly. The numbers they disclose are under a matching philosophy. They're just showing you how their reserves are backed. The equity balance sheet is made up of equity investments, mining operations, corporate reserves, and possibly more Bitcoin, with the rest distributed as dividends to shareholders. Number two, they're highly profitable and their equity is valuable. They can sell their equity to cover any gaps in their balance sheet. He said Tether has $120 billion in interest-yielding treasuries, which have been yielding 4% since 2023. That's $10 billion in liquid profit and loss with little cost for 150 employees, making one of the most efficient cash-generating businesses in the world. And by the way, this has been ongoing for many, many years that they are making quite a bit of money. He said, I'm guessing this would make their equity worth something in the $50 to $100 billion range, although they've reported they're looking to raise $20 billion for 3%, which would put them at a $500 plus billion valuation. Probably won't materialize and likely it's overvalued, but still highly valuable equity. I don't necessarily know about that. I mean, JP Morgan Bank is about $500 billion market cap, and that's one bank, the largest bank in the US. Tether is potentially the largest crypto bank in the entire world. Number three, he said banks operate on significantly lower fractional reserves. 5 to 15% of bank deposits are held in liquid assets. The other 85% are held in significantly more illiquid assets. Tether is different, but holds similar qualities to a bank in this regard and is significantly better collateralized. A key difference is banks are backed by lender of last resort, which is the central bank, but Tether is not. Now, I would argue that a little bit because clearly they're involved with the Federal Reserve at some level because they're involved with these overnight repo agreements, which are interbank lending markets, which an average company can't just get involved in, right? You need access to the Federal Reserve debt facilities. And so the fact that they have access to this tells me that they are somewhat of a bank. But regardless, the too long didn't read is Tether isn't going insolvent. Quite the opposite. They own a money printing machine. And that's true. And meanwhile, we're seeing Binance's CZ presenting Peter Schiff on stage at the Binance conference that went on in the beginning of December, a gold bar, which it was fake. And he asks, CZ tries to trick Peter Schiff saying, oh, this is the gold bar. Here's our certificate of, that it's real. And he asks Peter Schiff, like, do you think it's real? And Peter Schiff, like, I don't know if it's real. Like, the watch on my wrist is real, but I don't know if that is real, right? Because he hasn't been able to test it or test the quality or test the density of it. And so this is kind of where we're at, right? The crypto world is really clashing with the traditional financial world because in TradFi, everything is very clear based on math on paper. And in crypto, there's a lot of nuance. There's a lot of things that we don't necessarily understand. And there's a lot of ways to kind of risk mitigate for these large companies like these stablecoin issuers. But that doesn't mean that there's no risk. Remember, little risk still shows there is risk. And so, Arthur Hayes is stating that there's a risk here. I don't think that he's stating they are insolvent. And I don't think that Tether is insolvent. And I don't think they're going to ever become insolvent the way that FTX did. But there is a risk that these stablecoin issuers, especially as we go into lower rate environments into 2026, 2027, and further on, there is a huge risk that these stablecoin issuers will have issues generating as much money as they have been because the interest rates go down. And so, is the stablecoin dollar really backed by a dollar, or are they going to put more of their dollar denominated or dollar backing into Bitcoin and gold into the new currency of the world. I don't know. This is something that we're going to have to very closely keep an eye on. And you guys know we're going to do that right here on this channel. So make sure you guys are subscribed to the channel. Let me know your thoughts down below while you're down there. Don't forget to give the video a free thumbs up. And let me know whether you think Tether is insolvent, whether Tether is a risk, or whether everything's going to be totally fine. And by the way, this doesn't just go for Tether. This also goes for Circle. And because Circle is a publicly traded company, I think that we would see the price of Circle dropping more precipitously than just from the concern of the risk factor. And I think that while Paulo Adorno may think that, influencers have an incentive to push their competitors, aka Circle, I actually think that this is better for Tether than it is for Circle, because if people think that these stablecoin issuers could become insolvent, it's not really going to make a difference for Tether because they're not a publicly traded company. But for Circle, it would, because just that fear in the markets could cause people to sell off their stake in the stock. And by the way, we have been seeing that occurring with the Circle stock. Some of that has to do with the unlocks from their IPO stock, but some of it could also be due to this kind of concern about this solvency risk as rates continue to drive to the downside. I'll see you guys on the next video. Let me know your thoughts down below. And other than that, thanks for watching.